bring in RBS Chief Economist Michelle Girard. Michelle, good to see you. Thank you so much for joining us. What are your expectations today?
Well, we're not far off that consensus number you mentioned. We're looking for a gain of 220,000. So that's not far above what, the consensus estimate around 200,000 is. Coming into today, it doesn't feel like in the marketplace there's a bias. I don't think people are expecting the number could surprise either positively or negatively. They're all just waiting to see what it will do and what it might then mean for the Federal Reserve.
But the trend, of course, we see has been a global growth slowdown. So we're going to be focused on the participation rate. 38% of working age Americans are either out of a job and they don't want to get a job right now. They've given up. So what are the key headlines you're going to be looking at?
Well, a couple of things. First of all, you're exactly right. We're very focused on the fact that the global economy is weakening. But I will say the U.S. domestic economy looks fairly strong. I mean, we had car sales out yesterday that were very healthy. The construction, the housing sector doing well. So the good news is there was resilience in the U.S. economy. I think in terms of what everyone will be looking at, and as you mentioned, the labor force participation rate has been, people haven't been coming into the workforce like you'd expect because they're somewhat unsure about the ability to get a job. And that's actually helped to bring the unemployment rate down. The Federal Reserve is watching the unemployment rate closely. So even though we talk about the job gain, I think there's just as much focus on that unemployment rate. If it were to fall to 5%, I mean, as we get lower and lower, that's what's making the Federal Reserve think it's time to move interest rates up, because the lower the unemployment rate goes, ultimately, the more risk of higher inflation down the road.
Phil Orlando, what are you telling clients? What are you doing with your own money right now? I mean, here we are looking at the one final report ahead of, well, you got a number of other reports before the next Fed meeting. Right. But if we get a strong report, is this sort of going to move the needle for the Federal Reserve in October?
So Michelle is spot on. We're at 219, you're at 220. We're focused on the fact that ADP report was very good the other day, and the claims data has been running at a 15-year low. That's all very good. One thing that Michelle did mention that I think the Fed is focused on is that spread between the official rate of unemployment, the U3, and the labor impairment rate, the U6. Normally that spread would be about 3% if the economy, the labor market were very healthy. So if the rate of unemployment is down around 5, right now labor impairment is up north of 10%. That number's too high. There are too many discouraged workers, too many part-time people working that would like full-time work. So I really think the Fed would like to see that number come down. That said, if we get some better Chinese consumer data in between now and the December FOMC meeting, I think the Fed will have enough ammunition to go ahead and lift off.
Yeah, we'll see if the markets actually want that, Dagen.
Yeah, exactly. And speaking of the unemployment rate, but also the inflation and wages that never showed up.
Right.
So 2.2% is the year-over-year through August growth of private sector hourly earnings. Is there any reason to think that that's going to pick up even more?
It could pick up. That's what I thought you were going to say. Is the other thing I think markets are going to be watching is this all-important hourly earnings number, because, of course, more people are getting jobs, but are they getting more wages? Actually, we've got a fairly low, just a 0.1% increase, but that will tick the year-over-year rate up from 2.2 to 2.3. I think we are ultimately going to head up over the next several months. We're almost overdue to see, given how low the unemployment rate is, more wage growth, but it has been very frustrating. But that is going to be, I think, something too the markets are watching closely, because for the Fed and their decision, that's a key part of it.
Sure, Jack Otter.
There's one bit of optimism on this very point, which is that the JOLTS number just passed the hirings. So there's over 6 million job openings in this country, and if you look at that chart, I've never actually seen the openings pass the hirings. Right. So that is reason for optimism. Presumably, those offers are going to start carrying higher and higher wages. That's going to bring the inflation the Fed wants to see, and let's hope it brings the job participation rate up. Maybe eventually there'll be enough money on the table that people get up and take the job.
Yeah, that's a great point. If we get a really weak report, that's also on the table. I mean, because we have been seeing weaker than expected data on a number of areas.
Well, first of all, there's this question of, we don't even necessarily know for the market, what does even the market want to see? If it's a strong number, that's good for the economy, but maybe it means the Federal Reserve raises interest rates. A weak number, well, that's not so good in terms of what it means about growth, but if it keeps the Fed holding rates lower for longer. Last month's number, I actually will think there may be upward revisions. Last month's number was very disappointing. Private sector job growth, only 140,000. But August has a tendency to come in weaker and get revised up.
Yeah, we talked about that when it came.
Exactly.
When it crossed
so I think there's wide expectations. The August number will look better. But you're right. This market is very sensitive now because of the Fed staying on hold. There's some concern. Perhaps the Fed is seeing something that they're worried about, that the market should be worried about. So another weak number and perhaps no revisions to August, I think, would be unsettling, and having people say maybe the Fed was right. Now we see why they didn't move. Maybe there are cracks beginning in the U.S. economy. So that could reverberate through, I think, a negative surprise.
All right, we'll be watching that. Michelle, good to have you on the show today.
Thanks,
Thank you so much. Michelle Girard there. Don't miss